What's going on, guys, and welcome back to another video. So today I want to discuss 4 key targets that I want to focus on over the next few weeks in terms of my investing portfolio. So the 4 points in summary: I want to add further positions to my Trading212 portfolio. We'll discuss that. We'll have a very brief look through my dollar cost averaging and my plan going forward for that. The third point will be adding a new kind of style of investing to dollar cost averaging once they all go into the green. And fourthly, I want to give a brief update on another broker I'm going to use. And with all that being said, let's dive right on into today's video. So the first of these points is dollar cost averaging and my plans going forward for that. Now, I won't go into too much detail because most of my videos are around dollar cost averaging, but in summary, my overall channel or portfolio currently has 31 stocks/ETFs, and the whole premise of investing at the moment is the dollar cost average. Now, the two main reasons why I have 31 stocks/ETFs, firstly is for diversification. We can see on the left here, for example, I have all different sectors, so I have stocks within different sectors, again because different sectors react differently to different market conditions. And the second reason I hold 31 stocks/ETFs is to dollar cost average. So for example, if I held Chevron, at the moment is up about 70% of my portfolio. So if I only held that one stock, I'd never really get a chance to dollar cost average again because it would rarely go down 70%, especially for a blue chip stock. So that's why I hold 31 overall, because it will always give me a chance to dollar cost average. And at the moment, we currently have 3 of my 31 in the red. So we can see at the moment my overall portfolio on the left is just over the €8,700 mark, which is 8.7% towards my overall goal of having €100,000 invested in the market. We can also see we're currently up just under €1,200, or just under 16%, 15.93. So I'm quite happy with that's going. We can even see on the 1 week chart here, there has been a bit of a dip. Now, up until about Monday, we were up about 17.5%, so it has dropped about 2 or 2.5% at the moment. But again, that just poses great opportunities to dollar cost average as a long-term investor. So as I said, there is currently 3 stocks/ETFs in the red at the moment. They are Nike, the iShares Global Clean Energy ETF, and my penny stock High Tide. Now, I have been adding into the second two a lot more over the last few weeks because they have consistently been in the red, which isn't a bad thing either, and that kind of shows the importance of dollar cost averaging and slowly putting in funds and not lumping it all in at once, because the stock can go down even further. So it's very imperative to have extra cash at hand to take advantage of further dips. As I stated in prior videos, I will have a little cool off period in terms of investing further into these 3 stocks, again especially the second two, the iShares Clean Energy ETF and High Tide, mainly because I've been dollar cost averaging in here a lot over the last few weeks. So I'll give it a week or two to kind of breathe and see where the stock goes. If it goes down further, well and good, I'll even get in at a cheaper price, but if it goes back up in value, that's good as well because I go back into the green. So as I stated as well in yesterday's video, I will be investing a further €400 tomorrow once I get paid, but I won't be investing to dollar cost average into any of these 3 stocks for that very reason. That's my plan to dollar cost average over the next week or so, and basically to do nothing as such and leave it be and just see where it goes. So sometimes the best thing to do is do nothing, so we'll just see how it goes over the next week or so and then take further action. The second point is adding further positions. Now, as I stated, I currently have 31 stocks/ETFs, but I am kind of lacking in some respects in some of my sector pies. For example, utilities and material sector pies, we currently have no positions, so I definitely want to have at least 1 position in each of these pies going forward. And also, in my real estate pie, I only have 1 at the moment in the form of realty income, and I would definitely like to add a second stock here as well. The reason why I have no positions in my materials or utilities sectors was mainly at the start, I really didn't have any interest in those 2 sectors. I really didn't feel there was much kind of optimism there, or there wasn't much kind of gain to get or to be got from there. So that's why I left them out originally. But again, as a dollar cost average investor and a long-term investor, this might pose a good opportunity just to put in a small position into 1 stock within materials and utilities. And again, as I stated, I do like the real estate pie, real estate sector, and the 1 stock real income pays a monthly dividend, which is very nice and it's kind of added incentive. But I would like to add a second real estate stock here as well. So if you have any suggestions, now I have asked this in the past and I have got some good suggestions, so I'm kind of compiling a list at the moment and then kind of going through the best ones out of each. So if you have any suggestions in any of these 3 sectors, please comment below, and I'll be sure to look into these stocks, and who knows, I might even add them to my portfolio. The third point is a new broker. Now, I've discussed this in many videos in the past as well, and I have decided on picking DeGiro as my second broker of choice. Now, there's a few reasons for this, mainly for protection. So DeGiro kind of protects you up to €100,000, whereas on Trading212, because I'm not living in the UK, I'm only protected up to €20,000. So that's one of the reasons, and another reason is because they have extra markets and they've some better features than Trading212, obviously, and some worse. So it's nice to have a second broker to kind of bounce back and forth from. So my plan here, again, over the next few weeks, firstly, is to build up my Trading212 portfolio to 10 grand. So once I get up to the 10,000 mark on Trading212, I will slowly start to put extra funds going forward then into DeGiro. So that's why I have this broker set up and ready to go. I've also put a poll out on my YouTube community page a few weeks back asking which broker would people recommend, and DeGiro actually won hands down, which I was quite surprised with. I thought it would be the likes of, let's say, Free Trader eToro that a lot of the other UK style investors use at the moment. So I'm quite happy with how that actually went, and DeGiro was the first broker I used going forward at the very beginning before I changed to Trading212 because of free commission trading. Now, that is one of the drawbacks with DeGiro. Again, if you have a larger account, it makes no difference because it's only about 50-cent commission at any one go, buying and selling shares. So that isn't really a whole big issue. But when I was starting off with only a few hundred or even a few grand on Trading212, that was a much better option because I wasn't getting charged for commission or fees, something that makes a big difference as a small investor. So yeah, that's point 3 in terms of my second broker and when I'm going to invest once I get to the 10,000 mark on Trading212. Now the fourth point is probably one of the most important of the 4 points, and that's my new strategy towards dollar cost averaging. So I suppose I'm in a fairly good position in terms of something that you can't really complain about, that the majority of my stocks are in the green at the moment. Now, as I stated earlier, probably about 28 of the 31 are currently in the green, which is great. Again, you can't complain about that. But I kind of have posed the kind of problem, again, it's not really a problem, I know, but it kind of posed the kind of question of what am I going to do when all 31 stocks / ETFs eventually go into the green. Now, that's inevitable over the long term once, for example, if there was a stock in the red at the moment, if I keep pumping money in, it's eventually going to go back into the green because I'm continually getting in at a cheaper price. So definitely the question is posed, what will I do going forward? Just for example, my financial pie being an example here, we're up 32.5% overall and have 1,140 invested. Now we can see here on the screen, there's currently 5 holdings here and all 5 are in the green. For example, the bottom 3 here are up between 50 and 65%. Now there's probably no way that they'll go back into the red anytime soon, depending on a market crash. So even if there was a market crash, I can't really see the likes of Goldman Sachs dropping 65%. But again, all 5 stocks here, it'll be a very long time if I did have to wait for any of these to go back into the red. Even the top 2 here, Visa, MasterCard, up 12 to 15%. Again, these are all well-established blue chip financial stocks, so they aren't really volatile. So again, this poses the question, what am I going to do now? So I did ask this question many times in prior videos, and I have been given a lot of suggestions, so thanks very much for that. And the one that kind of stuck out for me was, instead of just looking at the overall price that I hold, if they're in the red or green, as a long-term investor, you should kind of look at the 1 or 3 month charts. Now again, I haven't decided which I'm going to actually use my metrics on. But for example, we can see here on JP Morgan, my overall position is currently up 52.5%, which is very good. I'm very happy with that. But however, this won't drop down 50% in the next few weeks anytime soon. So what I am going to do going forward, once all 31 are in the green, now I want to stress I'm not going to do this until all 31 are in the green. If 30 of them are, then I'm only going to focus on the one that's in the red. But once we have full all green, we're going to look at this kind of strategy. So for example, here JP Morgan is on the 1 month chart. It's down about 3.5 or 4% at the moment. It was up to about $158 a share, and it's now down to about 149 over the last month. So again, this is probably what I'll do going forward, is look at the 1 month or maybe even 3 month charts. Again, I haven't decided, so I will clarify all this once I do. But I might actually set dollar cost averaging in based on 1 or 3 month charts going forward. So that's just a very brief overview on the 4 main key points I want to focus on over the next few weeks. We discussed my dollar cost averaging and my current holdings. We also had a look at stocks in sectors that I want to buy in going forward. We then had a look at DeGiro, my second broker of choice. And finally, my new kind of strategy going forward in terms of dollar cost averaging once all 31 stocks / ETFs in my portfolio go into the green. If you found this anyway interesting or helpful, it'd be much appreciated as always if you're new around here, if you consider subscribing to the channel. And if you could smash that like button, it would really help me and the channel out going forward. And I'd love to know in the comment section below your thoughts on these 4 key factors that I want to go through over the next few weeks, and if you believe they are good factors or not. Thanks very much, enjoy your Wednesday, and I will see you all in tomorrow's video.